Oh, good morning, good morning, good morning. It is Monday, January 31st. It is the final day of January 2022. And what a month it has been. And so what is it? What is it that we need to know going for today and then going into this week? As I said, expect some window dressing on the final day of the month. The Fed continues to confuse. Kashkari comes out saying that maybe we're going to have a pause in the spring, while Atlanta's Bostic suggests maybe we're going to have a 50 basis point increase in the spring. Oil pushing higher over the Russia-Ukraine drama. Treasuries now yielding 1.78%. On their way to 2%. Let's not kid ourselves. And what's next for cryptos? 30,000 is a key level for Bitcoin. Keep your eyes on that. And what do we have for dinner tonight? We're going to have the linguine with prosciutto and peas. It's a simple dish to make, but it's always good. Simple to make, but will become a fan favorite. So look, stocks closed in the plus column on Friday, January 28th. Eco data suggesting that inflation remains an issue. The Personal Consumer Expenditures Index, otherwise known as the PCE, rose by 4.9% year over year, while another report revealed that employers spent 4% more on wages and benefits as those costs rise to 20-year highs, only helping to fuel the inflation story. Rising employment costs due to a tight labor market and the rebounding economy continue to tell the story. And while wages were up, prices were up even more, leaving the average worker still behind the eight ball. And this is what it means when we speak about the wage price spiral inflation. Wages go up, but then prices go up even more to offset that, putting more pressure on wages, which puts more pressure on prices. Do you see the cycle? Meanwhile, personal income rose by 0.3% and real spending fell by 1%, which does make some sense after the rapid pace of spending that we saw in the fourth quarter, when the media created a buying frenzy as they warned us all that if you didn't go out and buy stuff in September, October, November, then you wouldn't have anything to put under your tree. A narrative, by the way, which I absolutely abhor, but that's a whole nother conversation. In any event, all the indexes ended in the green on Friday, rising significantly after 3 lousy weeks of stock performance. The Nasdaq rose 420 points, or 3.2%. The S&P up 105, or 2.4%. The Russell up 38, or 1.9%, leaving the Dow Industrials and the Dow Transports up 564 points, or 1.6%, and 240 points, or 1.6%, respectively. Much of the move being credited to the oversold condition in the markets, which had the Dow off 8% from its November high. The S&P was off 10%, the Nasdaq off 18%, and the transports down 14% from their November highs, leaving all those three indexes in official correction territory, while the Russell is off 22% from its high, leaving that one in bear market territory. It has been, for all intents and purposes, a tough month. But nobody should be surprised. As we maneuver our way through the Fed tightening, navigating the transition from high growth, high inflation to one of more moderate growth and hopefully more moderate inflation is going to be the key challenge in 2022 for the Federal Reserve and for global central banks. Expect volatility to remain elevated as we digest the many market forces that remain in flux, right? Here I'm going to outline how my thoughts on the turbulence, right? And where I think it's going and what I think investors really need to kind of pay attention to. 2022 promises to be a year full of angst, yet opportunity. There are 3 paths I think that we could follow. The first, which is the most favorable, but the most unlikely, will see inflation fall while growth remains strong, especially if we're going to see 4 to 6 hikes, which would make it a reasonable expectation to think that that would ultimately slow the economy, right? If we get the hikes that they keep saying that we're going to get. The second and more challenging path is going to see rates rise and inflation continue to rise, or at least stay stubbornly elevated as growth stalls. Very much a possibility as the momentum appears to be building and the path for inflation is up rather than down for now. And the third scenario presented on Friday suggests that we're going to see an initial rate rise in March and then a pause in May or June, in complete contradiction to the narrative that has been shoved down our throats. Over the weekend, Minneapolis Fed President Neil Kashkari suggested that a rate pause is conceivable in the spring. To which I asked, the spring? That's when we're set to launch, right? Now we're pausing, so it's confusing the message, right? Because we're set to launch in March, but then he said we're going to pause in the spring. So what does he mean by that? Later spring? Anyway, you can Google the story. It's on Reuters.com. Just Google, Fed Kashkari pause rates, blah, 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 and you'll see the story come right up. And in it, he talks about potentially after the first rate rise, we could see a pause. And then here's why this makes zero sense to me, though, right? The Fed has now enlisted the help of almost every Fed member to join in the conversation, which they began in late December, when St. Louis Fed President Jimmy Bullard, then a non-voting member, first suggested that the Fed needs to be more aggressive. They need to halt the stimulus. They need to consider reducing the balance sheet, and they need to do it all in tandem. Remember, he said that late in December, right? Late in the month. And many tried to push those comments to the back burner ahead of the new year, trying not to create confusion and concern for the markets. Then in early January, our friends at Goldman, followed by JP Morgan, Bank of America, and the rest of them, and a range of others, joined the narrative suggesting very much the same thing. But it was now the new year. The slate was wiped clean. We had 12 months to figure it out. So calls for 6 to 8 hikes all of a sudden became appropriate, which really makes Kashgari's comments at the very least tone deaf. In my view, we can't go from saying that now is the time, we have to hurry, we have to stop everything, and then suddenly say, well, maybe it isn't. It reeks of mismanagement and challenges all levels of credibility. The transitory argument failed miserably. So any suggestion that we could pause after the first 25 basis point hike seems a bit foolish. Or does it? Enter stage left. Atlanta Fed President Rafi Bostic telling the Financial Times that every option is on the table for every meeting that the Fed is going to have in 2022. And that does make sense. That should not be a surprise to anybody. And a March rate increase could actually be 50 basis points and not the expected 25 basis points. A narrative that I also believe is appropriate, one that I've been saying needs to happen. And that, my friends, just might be the reason for Kashgari's comments, because a 50 basis point rate hike would double the expectation, so that then maybe the May and June increase, you could put it on ice, right? So, right, you see how they weave that narrative, right? We've gone from no problem, we got this, to maybe it's not so transitory, to we need to aggressively combat rising prices and we can expect 4 to 6 rate hikes in 2022 and the start of balance sheet reduction, to, well, maybe we can raise rates in March and then take a break. They float every possible option. This way they can say to the investment community, no matter what happens, is why are you surprised? It was out there in the public square. We've been discussing it. We put all these options out there, so nobody should be surprised. In the end, my guess is that the Fed is going to need to force a recession to halt rising inflation, because I just don't see how you can maneuver a soft landing in this environment. I just don't see it. My comments last week suggested that Jay missed the opportunity to take back the conversation in Wednesday's press conference. What we are seeing is that all these cross conversations continue to cause angst and volatility in the markets. And until there is more clarity on the future Fed path, then we can expect the volatility to continue. This morning, U.S. futures were mixed on the final day of the month. Dow futures were down 100. This was earlier in the morning. The S&Ps were down 4. The Nasdaq was up 60. The Russell down 12. 10-year Treasuries are yielding 1.78%. Oil's trading at $87.39 a barrel. That's up 35% from December and going higher, especially as the Russia-Ukraine story continues to steal the headlines. The VIX remains elevated. It is now up 70% from the early January lows, suggesting investor angst. Now, while there isn't any real economic news today, it is a full week of data points. Market U.S. manufacturing PMI, market U.S. services PMI, construction spending, ISM manufacturing PMI, the JOLTS job openings report of 10.3 million expected, factory orders, durable goods, and the biggie is Friday's non-farm payroll report, expectations of plus 150,000 new jobs created, although estimates range from a loss of 150,000 jobs to a gain of more than 200. While unemployment is expected to remain at 3.9%, average hourly earnings up 5.2% year over year, up from 4.7 last month, again suggesting upward prices on wages, which will see prices rise in the coming months. All right? Once again, it's that wage price spiral. Brian Deese, the senior advisor to Joe, is already out there trying to explain away why Friday's non-farm payroll report might look a bit wonky, as he said, as the administration attempts to explain away what a loss of jobs might suggest. Earnings this week include Stanley Works, Pulte Homes, ExxonMobil, PayPal, Google, AMD, Starbucks, and AbbVie, along with a host of others. European markets are mixed on the final day of trading in January. Monetary policy decisions are due out from the Bank of England and the ECB this week, and that's going to help to shape investor reactions. Earnings are going to continue to drive the individual action, while the Russia-Ukraine situation is going to continue to drive the geopolitical conversation. As of early this morning, the FTSE was off a little bit. The CAC was up a quarter of a basis point, 0.25%. The DAX up 0.7%. The Euro Stoxx up 0.6%. Spain off 0.2%. And Italy was up almost 1%. Cryptos continue to churn in place. Bitcoin is trading at 37,200, while Ethereum is trading at 2550. As the coming crypto winter continues to snag the headlines. Now, a crypto winter refers to basically a bear market, right? It's a prolonged bearish period when prices continue to fall over many months. Hello, bear market. Bitcoin is down 50% since November and would need to find support at 30,000 to calm the markets. A failure to hold at 30,000 will easily see 20,000 in a heartbeat. And if 20,000 doesn't hold, then all bets are off because it's a straight line down. The S&P closed on Friday at 4431, rising 105 points with 2.4%. It's the final day of the month, so expect lots of window dressing as portfolio managers work to dress up their portfolios going into February. The S&P remains below all three trend lines, and depending on how today's ends, we might get a better sense of the next move. I'm still in the camp that we have to test the lows put in on January 24th, which is 4,222 on the S&P before this is over. Now, just to be clear, there's been a lot of technical internal damage done to the markets, so it's going to thrash around until it gets more clarity. The Fed holds the key right now. What they say does matter, but it is what investors hear that's going to drive the action. Okay, so that's good. So now what are we having for dinner tonight? So this is such a simple dish. It's basically garlic and oil, prosciutto and peas, right? It's linguine with prosciutto and piselli. Piselli is peas in Italian. So for this you need linguine. You need thinly sliced prosciutto, which you're going to chop. You need olive oil. You need fresh garlic, which you're going to thinly slice. You need fresh grated Parmigiana cheese. You need chopped fresh parsley, salt and pepper, and you need fresh frozen peas that you're going to defrost and blanch quickly, couple of minutes, and then just set them aside, right? Now, you're going to bring a big pot of salted water to a rolling boil, put it on the back burner until you're ready, right? Because when you're ready, you'll add the linguine, you'll cook it for the 7 minutes, blah, 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 leaving it al dente, all that stuff. Meanwhile, in a large saute pan, one that you can add the pasta to, you want to add some olive oil, put it over medium heat, now add the chopped prosciutto and saute it for 2 to 3 minutes, right? You just want it to get a little bit crispy. Remove the prosciutto and just set it aside, leaving the oil in the pan. You might have to add a little bit more oil to the pan. Now you're going to heat it up. You're going to add the sliced garlic. You're going to cook that for 3 or 4 minutes. You don't want it to burn. You want to turn the heat off now, add back the prosciutto, and take those peas that you blanched and put them right in that oil with the prosciutto and the garlic. Mix it, toss it so that the peas and everything kind of get the flavor, right? Now, you're going to add the pasta to the pot. You're going to cook it till it's al dente, 7 or 8 minutes. You know how to do that. You want to strain the pasta, reserving a mug full of the pasta water. You want to take linguine, add it straight to the saute pan, mix it up well. Right now, the pasta is going to suck up the oil and the oil that's in the pan. And if it does, that's what you use the water for. Just add a little bit to keep it moist. Not wet, just moist. Now you want to add a handful or 2 of the fresh grated Parmigiana cheese. You want to toss it so you mix it well, taste it. If you need to season it with salt and pepper, go right ahead. But it should actually be perfect. And in any event, serve it in warm bowls. Always have extra cheese on the table for your guests. And you can always enjoy that again with a chilled white wine versus a red, right? Because it's a light dish. So you want something light, not something really heavy. In any event, the day is getting started. It's just 9 o'clock. The markets are about to open. It is the last day of the month. It's going to be a very interesting week, though. So until tomorrow, take good care.